Our guest says the current markets are a minefield. And he also says investors are tarrif-fied. Oh, my goodness. Let's bring in Tim Regan, Managing Director and Portfolio Manager at Kingwest Company. Great to see you.
Great to see you as well.
Oh, that's a good pun.
Well, you know, we've been going through this for a number of months, and people really just don't know what to do. Are they terrified? Not just in the markets, but how it may affect their day-to-day life. And some of it is a little overdone. But there are still good bargains in the market, especially when they've come off from their highs.
We'll get into some of your stock ideas shortly, but broadly, are you tempted to move more into cash in hope of better opportunities in a month or so?
Well, we went into at the end of the year, and now we have about 8-9% cash in our portfolios. Mm-hmm. That means we're still over 90% invested.
Right.
Much like Mr. Buffett and his cash, and he's still mainly invested. You really have to look at the long term. And if we look at it today, people are basing a lot of decisions on the capricious whims of a guy down south of the border who was president before, who knows that his base wants lower taxes, lower inflation, a better economy, and tariffs don't bring that.
I love this quote from Winston Churchill that you're bringing us. Churchill apparently said, "You can always count on Americans to do the right thing after they've tried everything else."
And let's hope that's true this time. And that was brought in trying to get them into World War II, where they dragged their feet. And so, you know, as Churchill also said, never let a good crisis go to waste. And whether you're an investment manager or perhaps Mark Carney, that's what you're doing today.
Yeah, it is interesting. Of course, they were reluctant to go into the Second World War because of isolationism. Mm-hmm. It is a strand in U.S. political thought.
Yes, absolutely. Americans are very myopic. A lot of Americans, if you talk to them, barely know what's going on in Canada today, that we have a quote-unquote tariff war with them. So it's endemic.
What about interest rates now? Did you hear anything of interest from the Fed yesterday?
Well, with the Fed's still worried about inflation that could come from tariffs. Mm-hmm. And the big thing, too, is really Trump has stated time and time again he wants to get the 10-year bond rate down. And he can only do that with the help, in some ways, of the Fed. So, you know, we're at a crossroads. But I would say that if inflation doesn't come in too hot in the next number of months, the Fed will gradually start to ease. But then again, that's my opinion.
You have some stock ideas. Yes. Uber Technologies.
Yes, Uber. It's one we bought at the beginning of the year. So we bought it when it was down about 20%. And as you can see, it's doing pretty well since the beginning of the year. But Uber, really, when you talk about ride shares, you know, people, if they want a tissue, they have a Kleenex, they Google things. Mm-hmm. If you want a ride share, you don't say ride share, you say Uber. Yeah. The ride share business is closing in on $200 billion, just shy of $200 billion globally, and Uber's almost half of that. I think they're about $82 billion on 176. They actually produced about $6.5 billion of free cash flow last year. They're going to grow that at 20% plus in the next little bit. And we're talking, when I talked about rideshare, they also have delivery, advertising. So they've really become a dominant giant in a growing industry. In fact, I even Ubered here today, Andrew.
Yes, it is fascinating. They've changed the face of urban transportation. The stock up about 23% this year. TMX Group, that stock, last time I checked, was near record highs.
It's near record highs, and we have actually owned it since 2003. I'm not sure if we bought it when it went public or just after. Okay. And it's a great play on the overall Canadian market, but it's diversified quite a bit. It's not just our, I guess, monopolistic exchange, but all the data feeds you use, you're probably buying their data. Oh, yeah. They provide energy data in Europe, ETF data, and they provide data feeds for and market quotes for North America. It's just a great business. And about half of their business is outside of Canada doing that right now. So it's nice to buy a monopoly that's not cheap, but it grows. It's not expensive, but it's not cheap, and we've held it, and it's been a great story for us.
remember in the first Alien movie, the alien is described as the perfect predator. Now, I don't think the TMX is in any way a predator, but what I'm getting at is this business of selling data. That's a beautiful business, isn't it? Because you bring in new customers, you know extra costs.
It's been great. You guys maybe at BNN Bloomberg might know something about that. So no, but it is a great business.
Yeah.
And when we look at AI and everything going forward, data's key.
I'm told it was a xenomorph. I'm about to actually watch Alien Romulus, the next one, and I know my wife and I will be like this. Oh. Anyway, I digress. Brookfield, you see potential there.
Yeah, Brookfield's been, it is our gigantic Canadian alternative asset manager. Brookfield has had a good tear. I know you're going to put up the chart and show how well it's done. It's come off a little bit. Mm-hmm. But they brought in $135 billion last year of new assets to manage. Huh. Now, a lot of their assets, real estate, infrastructure, lots of private credit, that's where people want to go, the last two. And in fact, we're looking at Brookfield should be about $120 in the next 2 to 3 years. Brookfield themselves came out with their 5-year plan and said that they will earn $30 of free cash flow per share in 5 years, and that the share should trade at $176 in 5 years. That's their goal. They're moving on that path. Mm-hmm. Let's say they get 2/3 of the way there. That's still a huge win for everyone. And if you look at the business, it's probably a decent buying opportunity because a lot of the asset managers like Brookfield or the ones in the States have sold off with a lot of the tariff talk and the weak markets. So we like Brookfield quite a bit.
Tim, always great hearing from you. Thanks very much.
Great to see you.